Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Zaid Muhammad Hafizuddin bin Said Zakir Hussain. I am from BA2495A. So today I will explain more details about the impact of COVID-19 on banking sector. So the introduction is the banking industry, among other economic sectors, has been significantly impacted by the COVID-19 epidemics, which started in late 2019. Bank and financial institutions have faced several difficulties as a result on the pandemic, using the nature and the lockdowns and restrictions that governments throughout the world have implemented as a response. So overall, the banking industry has faced a number of difficulties as a result of the COVID-19 outbreak. So banks have had to manage credit risk, negotiate economic unpredictability, speed up digital transformation initiative, and adjust to changing client expectations. So the pandemic's long-term effects on the banking industry are still being felt, and banks will continue to experience short and long-term effects as they work to assist an economic recovery and fortify their resilience in the post-pandemic era. Next, we go to the overview of COVID-19 effect on the banking sector. The COVID-19 epidemic has significantly altered the banking industry landscape and presented both possibility and problems. Here is a summary of the main effects. So the first one is economic downturn and financial market volatility. So a worldwide economic crisis brought on by the epidemic has increased unemployment, disrupted supply networks, and diminished economic activity. Increasing credit risk, decreased consumer and corporate confidence, and increasing market volatility have all been challenges for financial institutions. So the next one is asset quality and loan provision. As borrowers encounter financial difficulty, banks have seen a decline in asset quality. As a result, there are now more non-performing loans, we call it NPLs, which has forced companies to make larger provision to cover prospective credit losses. Financial institutions have been aggressively managing their loan portfolios, putting programs in place to restructure loans and boosting risk mitigation measures. Next is profitability and revenue pressures. So, produce interest rate margin, decreasing transaction activity, and increasing provision for credit losses have put strain on banks' profitability. Lower interest rates have an influence on net interest income, while decreased economic activity has an impact on non-interest revenue sources including fees and commissions. Maintaining profitability now depends heavily on cost control and efficiency improvement. In conclusion, the COVID-19 pandemic has an substantial influence on the banking industry and has created difficulty with regard to asset quality, financial success, and operational resilience. It has, however, also quickened the digital revolution and opened door for innovation to succeed in the post-pandemic period. Banks will need to embrace technology, adapt to the changing environment, and concentrate on meeting the demand of their customers. Moreover, we go to the impact of COVID-19 on the banking sector. The banking industry has been significantly impacted by the COVID-19 epidemic, with several areas of its performance and operation being impacted. Here are some significant ways that the pandemic has affected the financial industry. So we go to the economic impact. A global economic slowdown brought on by the epidemic affected consumer spending, supply network, and corporate operations. So stock prices, interest rates, and current rate all fluctuate as a result of increased market volatility and unpredictability. These elements have an effect on the stability, asset quality, and profitability of bank, for sure. So the next point is credit risk and loan defaults. As a result of lockdown, decreased profit and job losses, business and people during the epidemic encountered substantial financial difficulties. Due to this, banks now face a higher risk of loan default and non-performing loans. Small company, the hospitality industry, the tourist industry, and the retail industry have all been particularly vulnerable, which has increased the credit risk exposure for banks that have exposure to these industries. And the last point is digital transformation. The trend to digital banking and remote transaction was accelerated by the epidemic. To keep up with the rising demand for online and mobile banking, banks have to quickly improve their digital infrastructure and services. This changeover emphasizes the significant and strong cybersecurity measure to safeguard client information and avoid fraud. So the last one is the efficiency studies on the financial impact on COVID-19 on banking sector. The operational effectiveness of cost management tactics and implements by banks during the pandemic have been the topic of efficiency studies relating to the financial impact of COVID-19 on banking. This analysis look at how banks have handled the crisis and point out areas that might want to improve. The following are some crucial topics covered in such studies. For the first one is digital transformation. Studies on efficiency have evaluated banks' capacity to swiftly adopt remote working practice as well as the efficiency of their digital infrastructure for reliability option and effective service delivery. They assess the use of digital channels, remote collaboration tools, and cybersecurity measures. Okay. Next is a process automation and streamlining. Researchers have examined the effort made by banks to increase operational effectiveness. The encompasses the digitalization of paper-based processes, the automation of manual operation, and the use of sophisticated analytics to decision-making and workflow optimization. Next is compliance and risk management. Efficiency studies evaluate how banks handle compliance and risk through the epidemics. The effectiveness of risk assessment framework, credit risk management procedures, and regulatory compliance measures are all evaluated in this process. The effect of this technique on operational effectiveness and total risk exposure is studied by researchers. So the last point is benchmarking performance. Comparison bank performance to that their counterpart in the industry is common step in efficiency studies. To find opportunity for improvement and best practices, researchers evaluate important efficiency indicators including cost to income ratios, return on asset, and productivity ratio. So studies on efficiency in relation to the financial impact of COVID-19 on banking are intended to provide light on how banks have modified their operation, control expenses, and increase efficiency throughout the crisis. As banks negotiate the post-pandemic climate, the study assists them in identifying opportunity for optimization, innovation, and operational resilience. Okay, for the conclusion, the banking industry has been significantly impacted by the COVID-19 outbreak in a variety of ways. The recession in the economy, the turbulence on the financial market, and the elevated credit risk brought on by loan defaults have all significantly hampered the profitability and asset quality of banks. So the epidemic has speed up the digitalization of financial service, requiring quick adoption of remote banking and stronger cybersecurity precautions. While helping borrowers, interest rate reduction, regulatory reform have also had an impact on banks' net interest margin and forced them to deal with challenging compliance environment. So overall, the banking industry has had to manage a terrain of changing client needs, credit concern, and economic insecurity. Banks' top goals have been to adapt to digital banking, manage credit risk, and hold solid capital and liquidity position. The pandemic's long-term effect on the banking industry have not yet been fully realized, and banks will still confront opportunity and difficulty as they work to promote an economic recovery and fortify their resilience in a post-pandemic future. So that's all from me. Thank you.